Hi guys, it's Crypto Bear Pedro speaking. Welcome to today's exclusivity report. And today I'm going to kick it off for you with a weekly chart of Bitstamp USD spot price. On Bitstamp exchange, I've repeated so many times how important it is to stick to one and the same data vendor and provider in order to have one and the same relevance of the same data source, right? Because many exchanges actually tend to oscillate and fluctuate around certain indexes or indices, if you will, right? And well, on one exchange, Bitcoin may be worth 21,281, and on another on Bitstamp, it has 1279, for instance, right? So it's very important to have one of the same data source. And while we are at it, accounting for this entire, of course, major breakdown results, we are looking at a consolidation pattern or a form of a consolidation pattern as the rising wedge on the lower time frame actually burst, did manage to burst to the downside. Such a breakdown conveys the message that it's enabled to actually catch up with its 200-day average, just like many stocks already had on their accounts, basically, right? Because many stocks not only pushed and broke, through their major highs of earlier this year, May, June period, but at the same time retested a 200-day average. For Bitcoin, if you will, this being the 200-day average, this being the 200-week average, 200-day average has never been actually retested for Bitcoin, right? We are looking at this major case and instance of underperformance where Bitcoin would show a very big weakness in terms of relative strength against other many stocks. And as a result of it, there is this momentum principle or paradigm that the outperforming assets will continue to outperform and the underperforming assets will continue to underperform. And this seems to actually bring the relevance to this current Bitcoin chart, as it had rejected major support, X support and current resistance area, not only where what the stocks actually did manage to break through to retest the 200-day average respectively. Bitcoin not only did not manage to get this high, instead it had rejected, in its earliest form. And its first very opportunity, first very, chance and attempt to break, it has been rejected already, right? So the very, I would say, more up-to-date resistance forever, was somewhere around $25,000, $26,000, and Bitcoin did not manage to climb above it. Instead, it presented a major rejection, an outside bar, or a bearish engulfing, if you will, following this corrective wave, which barely made it upwards in an upward sloping, movement trajectory. So here we are, right? Another week after a couple of short intrade periods, over 200 week average, over 23 200. We're looking at a major breakdown of about 10% of the highs, and at the same of the highs of the local highs, of course, and at the same time leaving Bitcoin in a very uncomfortable situation where it really to catch up where with the most of the stocks, it would have to really pull off a move of 50% upwards, right? 50% push will need to be presented if Bitcoin wanted to be in a position where many stocks are, right? Many stocks actually not only had already, again, climbed as high as the 200-day average respectively, but it managed to already reject it, right? While Bitcoin is right here. It kind of like, got rejected in the preliminary, actions, if you will. It really did not make it through the phase one. And instead, this major resistance area, seems to accumulate, seems to get larger, right? Not only 30,000 area seems to be strong and relevant, as it was, for respectively also for the previous swing lows areas, but it also seems to grow larger, grow thicker as the cluster of the resistances got stronger, having basically eliminated Bitcoin out of the round and competition in the preliminary tests and phases. So this is, if you ask me, a clear confirmation of a momentum principle where underperforming assets will continue to underperform. This actually is negative for Bitcoin, if you ask me. So I would argue that having this overall recessionary environment, having recession already confirmed with two subsequent quarters of negative GDP growth for U.S. Economy, I would argue that this overall is not looking too promising. Especially with dollar growing on strength, right? So lots of these macroeconomic factors are not really speaking in favors of Bitcoin either. So there we take it. if we take it to the, well, we may even take off the bpro for a second. But if we are to again position, get a little bit of a context for bitcoin on the daily chart, well, then you're looking at this 200-day average, just like I was referring to it, and the fact of a rising wedge breakdown, right? So just like I was saying, tons of warnings here. Of course, we don't want to fall, for something that we know as a hindsight bias where everything was obvious. Of course, nothing of that was obvious. Everything is obvious in hindsight. Nothing is obvious at the time of making a decision. However, stop management, stop losses, and risk management practices actually is what makes trading more profitable or secure, protected. So here, having this potential targeted movement, of 35,000, 3,500 or $3,500, basically, we are looking at a potential price objective for a measured move to the downside somewhere closer around $20,000, right? So if I were to say then, based on the measured move, on the measured rule of this rising wedge pattern, I would argue that Bitcoin still has some potential downside potential left, closer to $20,000 region. So it potentially still may drop a couple of percent, from the current pricing, to only match for its original target, of this rising wedge pattern. And because many people tend to anchor and measure and analyze it in similar ways, seeing the same rising wedge pattern, giving and adding and the same objectives, targets, putting it in a chart. This seems to be the fair expectation, and the fair air. It becomes the more fair it becomes, the more people would actually anchor towards one and the same price objective. So what I would argue, that having this short-term potential for $20,000 approximately, Bitcoin may actually, sink lower. And the reason is that this is an example of a failed pattern. Many stocks, when they actually broke out, of this similar consolidation pattern here, they already followed through, right? There was a strong consolidation, breakout, retest period, which did manage to hold through and push higher. This follow through example and instance for many stocks is what made them reach their 200-day averages, which is a fair bear market mean reversion targets for many of those. Instead, Bitcoin had failed to maintain, to break and hold this new support level, invalidating basically this concept of a support. And instead, it actually clusters more resistances and sellers, as it may seem, analyzing it from a certain time perspective. So the fact that we are looking at a failed pattern, the failed breakout, failed top, makes me think that it's not only about the price objective getting to, just relying solely on this rising wedge pattern. Instead, in my opinion, we may be looking, however relevant my opinion is, we might be looking at a little bit of a more aggressive and violent retracement to the downside, as Bitcoin failed to prove its strength and its validity where many stocks did. It is a very big sign of weakness, if you ask me, and the fact that some people may refer to it as that the risk barometer basically failed, right? As the risk appetite has clearly decreased. Some people, consider Bitcoin be basically their barometer for the sentiment, their risk appetite barometer. So here, if we are to put these lens in here, I would argue that Bitcoin failed thoroughly and severely. So, however relevant or irrelevant my opinion is, I think we may actually personally see some lower targets, and this may have been a preliminary and premature invalidation of this bear market rally, which didn't even manage to develop nicely for Bitcoin to catch up with its fair long-term value, just like many stocks did. Again, big sign of weakness and rejection of 200-week average. Big, I would argue, sign in favor of the bears. So here, having this failed pattern, this failed breakout on top, it makes me think that the failed patterns, failed breakouts tend to perform better in the opposite direction than the breakout, the direction itself. The breakout direction was upwards, it failed. So it makes sense to anticipate a little bit of more aggressive, be ready at least, be safe than sorry, for more aggressive sell-off, and I would argue potentially set of new lows, new targets as the recession actually gets stronger and stronger. It takes time until businesses actually start collapsing and start filling this recession, as the employment and higher payroll costs basically increase, as the unemployment goes up, as the consumer spending decreases, as the overall firm that country really is. Country is a firm. Country is a form of a company. That it all kind of like just goes weaker and weaker.